Okay, I think I'm on. Okay, let's do this. Let's do that. Oh man, what the hell? Okay, here we go. Goodness gracious. Okay, ooh. Who's clicking on like already? Who's here? Okay, let me... That is so weird. Okay. Hey Sharon, what's up? Thank you for joining. So I just watch Moran's shows. I hope you have a chance to watch his as well. Always a treat every time Moran's is on. Can't go wrong with that. Okay, let me set up real quick. Of course, there's a lot to talk about today, but let me kind of set up real quick here before I go on to talk about the best investment ever, right? In my opinion, no need to be a little bit okay. Here's from Moran's fam. Thank you, Sharon. I appreciate you. I saw you're just subscribed to me today, so appreciate that. I mean, a couple days ago, maybe. But yeah, always appreciative of that. Okay. Alright, let me see if I could wait for a few minutes here. Okay. Alrighty. So let's get the show going, huh? I have Sharon's over here, so welcome again. Now the price action, obviously, I was following it pretty closely this morning and was able to kind of take advantage of the dip. Now the way that I did do on my trading account, I have now I don't know if you how much you watch me, Sharon, but I have this strategy that I do with Gamestop now, because I've been studying this company for a long time. The first time I got in was around, let me see, like 2001 of November 2001. So it was really high right here. So I've been buying in, of course, dips and not, kind of averaging down throughout, the year. And of course, when I first got into it, it was around $60, right? And of course, back then I didn't learn as much as I learn now about the company. I originally bought in because of Brian Cohen, right? Researching about him and about Chewy, about everything that has to do with Brian Cohen. At the time, he was the chairman, right? He was not a CEO yet. And of course, like, I read about the letter that he wrote to the board of director when he bought into it, and the 10% into the company. And the direction in which he is able to achieve right now is what was in that letter. And of course, to me, that is a kind of a jumping point for me. But again, when I got into that particular position, it was in my Roth IRA. And at the time, I was just doing it slow little bites at a time. The way that I set it up, it's a pretty complicated because I could not pick a price because, again, just the brokerage that I use, you could only buy in the early morning. So whatever, you pick. So a percentage would go to the early morning trade, and whatever price they give me, that would be the price of that. And so that's how I like it, that in that sense. So those are the long-term hold type of thing for me, right? And everything I have in that account right now is in GME. And of course, I'm adding, recently as well, in the 15s and all that stuff. Now, that account is my quote unquote moon back, right? And so I have this, again, I developed this strategy about this company for a long time, and I think that this is the best for me because I'm pretty antsy, in actuality. And so that's why I developed that one, to be like, hey, no matter what, I'm just going to averaging into the company. And so I have quite a long way for me to kind of like even care about what the price is doing. But at the same time, though, I have another account that I do a swing trading on. A swing trading, it just means that you're buying into the company, and then, you trade, whether it is options and doing a whole bunch of, strategy in order to take advantage of the, price action, right? And so as a day trader before this, I've learned that day trading is very stressful for anyone to be in. And so that's why I develop a swing trading. And swing trading, again, you buy at a certain price, and then you're hoping like in a month or week or whatever, if the price action kind of give rise to you wanting to benefit from the price action, right, from here to here, right? It's pretty steep, right, if you want to do a swing trading for that. 50% from here. So some people are very happy with the 50% move, but the problem with the swing trading and all that stuff, you never know where the price is going to go. And this is why the lines and people are following trends and RSI and all of that stuff. I learned to do that. But again, for me, I'm not good at it. Not good at it at all. And so, of course, it's all about learning experience for me. And this is why I developed my own strategy to do this in order to take advantage of the price action that is happening in GameStop. And because I know exactly what this company is about to do, I'm happy to kind of follow it day to day. And on top of that, if the price action permits me to gain more access to this particular company, I will do that. And so currently my trading account right now is all in GME, but I'm doing a strategy that is called a wheel strategy. Now this strategy obviously is a very common one where, if you want to learn more about it, you could, do the, what is it called? A Google search, and there's tons of people who would explain to you a lot more in depth and much better at explaining to you what is going on with that strategy. Now, every strategy has a risk associated with it, so make sure you understand the risk before you doing that, right? In my opinion, I feel like I'm pretty well versed on that. That's why I'm feeling comfortable doing the strategy for that. Now, that strategy obviously is a skew towards somebody who want to own more shares of this company, right? That you don't mind owning the shares of, right? Let's say you buy or writing a cash secure put on a $12 price point right now. Yes, you could get to collect the premium, but if the price falls down to wherever, down here, you would be forced to buy GME at $12. Now, for me, I wouldn't mind buying GME at $12 right now, right? Because it's ridiculous for me to even see GME at $12 right now. It's just like comical to me. Now, Again, that doesn't mean that the price would never come down to 9 or whatever, right? The reason why people think that it's coming down to 9 is because of this particular price point right here. This particular, I mean, as a trader, I know like when I learn how to trade, this is what I learn, is that people who are doing the chart and all that stuff, they are looking into this level right here. And my suspicion is that, you know, the people that are suppressing the price are programmers, are you know, algorithm. They would create this algorithm in order to push the price down from those levels of traders, right? And this is why people who are trading usually lose 99% of the time, because they don't realize that they are actually trading against computer, right? And so that's why they're like ping-ponging. Oh, I've got to sell it here. I've got to sell it here. Oh, I've got to buy now, right? But by the time you buy into it, you're probably buying into it like into this candle right here, right? And again, like, unless you are a professional, you know, traders, you might not be able to catch those things. And this is why, you know, I have my long-term one where I don't care what price it is, because I'm going to hold it for a long term, right? Long-term back holding type thing, right? And, you know, those strategy also work as well. Like I bring up Warren Buffett all the time, because Warren Buffett is famous for a long-term holder type of decade stock picker type thing, right? Where, you know, his famous saying is, if you don't want to hold a stock for at least 10 years, then you have no business in holding that stock. Like, you shouldn't be holding that stock at all, right? And so that's why he's becoming, you know, the billionaire that he is. But most people don't realize this. So let me see. This is shocking to me too, because I thought it was shocking to find this out. Hold on, let me see if I could, right here. So now this video, this gentleman, I've been, you know, watching him quite a bit. But you see this right here? I don't know if any of you see that age group right there. So $3 right there, that representative of billions, right? So $3 billion at the age of 65. Now at 40, he had like $1 million or something like that. And so he was able to turn $1 million at 40 years old, and then turn it into $3 billion at 65. And the rest of it right now at 99 years old, he has this much. This is the power of owning things for a long time and picking the right stock. Obviously, you have to pick the right stock, right, to be able to create this type of return. But keep in mind, this is a time span of freaking, 30 years or more, right? And so, again, this is the power of, like, of course, our averaging down, right? Now, I'm sure at this point in time, he was diversifying, you know, his portfolio already. And I'm sure this is also due to the money printing in the 30-year time spans that we have been going through, the low interest rate environment in which, you know, caused those security to go up in prices, while everybody who's trying to save in the market. But again, you have to understand the dynamic of what it's like to have a zero interest rate, right? Traditionally, zero interest rate is good for businesses that are over leveraging on debt and all that stuff. And this is why most company are in debt right now, right? And they can't get out of it right now, because even just 1% increase in rate is going to kind of stipend or deter their income, right? Net income is lower. So, hi Sharon. Hi Amber. Thank you for joining. Appreciate you. But yeah, I mean, this is the power of holding stuff for the long term, and this is why I have my long term hold. Now, that's not to say that, you know, you couldn't take advantage of the swing trading aspect of it. Now, the reason why I have that swing trading account, number one, I like to learn as much as I can about the market, what it's like to kind of try to beat the S&P 500 on my own self, right? That's why I have those accounts set up that way, so that I could take advantage of every single angle of this particular play. Now, not to say that you can't accumulate and then buy as much as you can based on the long-term hold strategy. But with this one also too, just so you know, there's a cap on how much I could make on the movement of the stock, right? And so again, you have to understand the risk here in order to do what I'm doing in this account right here. And so if you want to learn more, you could learn about this one right here. What is it? The wheel strategy, so to speak. And again, if you do the wheel strategy, you are skewing towards owning more of GameStop share at a slower pace. Obviously, it depends on what the price action is doing. Right here. So if you do this one, make sure understand the risk and reward and all that stuff. And it's pretty what is it, famous strategy to do on any stock. It doesn't have to be GameStop, honestly. Like, GameStop just have more of a implied volatility that will give you more premium than the rest of the other stock. Now, high volatility means high chance of you losing money as well. But again, since I love this company, I don't mind owning a share of this company if it's something that is going against my, go against the strategy. When I pick the strike price, I don't mind owning it at that point. But anyway, so that's that. I know, like, I was watching this one, I was cracking up most of the time, but I'm not gonna play the whole video here. But if you want to take a look at that video, go ahead and give him make sure you have I want this view to go up. So that's why. But this is pretty cool, to see Ryan Cohen in his, working mode here, right? Of course, it's just I don't know if it's a publicity or anything like that, but it's very refreshing to see what Ryan Cohen is doing with this company. And to me, I don't see a stage going on here where he was scripting everything. It was just acting normal, like a normal human being, right? And so this is why I like Ryan Cohen, is because of his just personality, right? Very down to earth, very, fun seeming, like a fun person to hang around, just like a normal human being. And there's no ounce of I'm better than you or anything like that, right? Even though he have a wealth of knowledge about, running a business and everything. Now, I don't realize how short he actually is. I wonder how short he is in person, but seems like he's kind of like a normal person size here. But yeah, I encourage everybody to take a look at that video and see how it is. But yeah, very good sense of humor, and people really love that investment because of him, obviously. And it's not just him, but the demonstration on the balance sheet itself. So that's that. All right, so let's do this real quick. Now, on my channel, I always take a look at this particular one because it's kind of important to see what's going on in the market. Just liked and subscribe. What's up, Emo? Oh, thank you. I don't know who you are, but thank you so much for subscribing and welcome to the chat. But anyway, so the option chain here is, so usually, market makers is notorious for keeping the price at the max pain level, right? So this week, this Friday, max pain is going to be $13.50. Not to say that the max pain would never change. Of course, it's based on who is buying into those call options and in the money, out of the money, and all that stuff. So understand where you are at. So if it adds 13.50 right here, it would coming out $2 from there, right? Not to say that it will ever come to that, because there might be some put that is in the money right there. So is it going to be successful for this to happen? Because currently the current price is around $12. So this one, if this Friday, it's still at $12 right now. Around 3,000 contract would be in the money. So that means that, 250,000 shares would be sold into the market next week. So I'm sure this price action was due to the in the money put option that was in the money previous week. So that's how option works. I hope I make sense in that explanation. Just like the same way, that whole gamma ram thing that the people are, spewing out at a couple years ago when GME ran was could happen the other way as well. So this is why you see the steep price action that makes no damn sense whatsoever. Sometimes it just gap up and gap down with no apparent reason. But just know that the option chain kind of dictate the price as well. And again, this is due to market maker, obviously, and or people who are just betting up and down the price of GME because they want to speculate on, okay, this week is going to be, under 15, right? And so just be aware of that as well. For next earning, though, we don't know when yet, but usually around June. If you look at the June option chain, it's around $16, right? Max pain right now. So for those of you who doesn't know what max pain is, it's just max pain for the retailer, meaning the maximum amount of loss delivered to retailer who bet against GameStop or bet for GameStop would be at $16. If it's at $16, meaning that the market maker would make the most money at $16 due to this option, open interest. I hope that makes sense. Now, this thing could change at any time, obviously, based on how many people are interested in buying into the call, the puts, and all that stuff, right? And so this is just a case in point here. If you look at right here, that 5,000 contract right there was in the money. So if these people choose to exercise their option on the put side, the market maker would have to sell, like they could technically exercise and then sell it into the market and make a profit. I hope that makes sense. So perhaps that's what is happening. Hold on one second. One second. Okay, so that's that. Okay, the other one I was looking at here is the short volume. Now, this is always fun for me to look at for some reason, right? And just like Morantz was saying, there has been a picked up in volume. More and more people are more enticing because of the price. It's just ridiculous to see GameStop at this price, right? Of course, for people who thinks the demise of the company is coming, they're gonna bet against it, right? But we all know what's happening, day to day. It seems like they have to keep the price down, and it's almost like the short volume is increasing by the day. If you look at the previous before the earnings, right? We haven't seen GME trading above 3 million shares ever, right? Now it's picked up to twice as much, 3 times as much, right? So again, volume is coming back. People are more and more enthusiastic about this particular company because again, it's ridiculous. It's profitable. It has the money in the bank. It's not going to go bankrupt at any time soon. Yeah, we could argue about how much they are actually making in terms of net income. We could argue about that. Yeah, might be not fast enough for you or not much money that in your opinion. In my opinion, $6 million is a lot of money to me anyway, as a peasant myself. Never ever able to make $6 million myself here. And so to me, that's a good amount of money to at least stash in the bank, right? But anyway, so just take a note of that. Even this one right here, 7 million shares being shorted to the market right there. And not only that, you have the short exempt or off exchange exempt. Now this one, in my opinion, this is the naked shorting aspect of thing, but don't quote me on this. I might be wrong on that, right? Because it's exempt volume. To be delivered, the share to be delivered, later on, whenever they feel like it, right? But yeah, the short interest or the short amount of volume is being increased ever since, and the volume being traded is also increased as well. That's good. That's good. All right. Now let's look at this one. I was like, of course they're gonna meme stock the hell out of us again, right? So we being coupled with AMC, Reddit, and GameStop Rumble. So again, AMC is just going to come out of the woodwork again. People gonna pump up AMC saying it's the same thing as GME again. So we have to deal with all that BS as the investor in GME. Now I know I used to be an investor in AMC as well, but of course, I explained that in my other live, that due to Moran's, obviously thanks to him, I was kind of like looking for a different opinion on what people are saying about AMC, because at the time I did have a lot, like most of my portfolio in my Roth right now was in AMC, and I was like, oh shoot, like I need some sort of like a second opinion here. And so I was so glad that I found Moran's at that time, and that's when I saw when they were doing Ape, right? Ever since that Ape thing was like, oh, forget it, this is not a good investment. And of course, like we all know now, learn a lot about how AMC is Apollo, and Apollo owned for a long time, and we all know what Apollo is, right? Private equity who is just there to gut the company from within. And it just so happened that it's convenient for these people to use AMC in order to go against GameStop, to compare and again, like if you don't know the backstory, you might believe the same thing. And this is what we're trying to kind of educate people on, this type of thing, in order to kind of decouple GME from AMC, right? And we have like Tonko Native like coming out and say how it's the same company and all that stuff. And I don't understand how these people could say that, because when I looked into it myself, right, this is what I learned to do. And then again, based on Warren Buffett way of investing, Peter Lynch way of investing, right? Every single playbook out there about, other people who have more of an experience than me on the market, would say all the time, right? Peter Lynch, have this way of picking stocks where, there's like 9 different criteria, and almost all of them kind of apply to GameStop. I encourage people to look into Peter Lynch if you haven't heard of him before. And one of the things that he was saying about like picking stock that is successful is the turnarounds, right? If you kind of Google turnarounds, Peter Lynch, you would hear he's describing GameStop, right? He didn't say GameStop, but again, like this is like the trick of picking the right stock, right? And so a turnaround usually takes around 2 to 4 years, 2 to 3 years of kind of like cutting costs, doing the right thing in order to, increase in profit, right? And so that's what Ryan Cohen has been doing. Was able to decrease the cost of revenue into this amount. It's just, again, very, very impressive to me, right? Of course, people, up in arm about the revenue down. I'm not saying that I'm happy with that, but hey, how much you get to keep, this is where I'm kind of like living right now, right? Now, I know Marantz was saying about a $300 million swing. Currently, because of the net income and all of the, pre-tax income, technically, this could be counted as, $300 million, sorry. If you do from here to here, that's $300 million swing right there. So if we were to do a $300 million swing for the next quarter, right, then the next one would be $100 million, right? That's what we're hoping, right, that quarter one is going to yield us that much. Oh man, if we post $100 million in the plus next quarter, would be like mind-blowing, right? Mind-bogglingly. What else? But I don't know if we're gonna do that. So if you project that, hold on, let me see. Okay, so if you assume that GME is gonna do the same amount of decline right there, so instead of 1.1 or $1.2 million, $1 billion, it's going to be a little bit less than $1 billion. So if they come out to be $1 billion, like above $1 billion, but I think the people up here, Wall Street already have a projection for GameStop right here. So they were estimating that GameStop's going to be able to generate $1.4 billion and going to lose 9 cents. Okay? So that's what we're trying to beat right here. But the last time, let me see. Hold on. This one is March. This one is June of last year. So last time we were able to beat the expectation by 1 cent and still come under, the revenue. This is the pain point that we have to kind of come back to, right? Decrease in revenue really doesn't mean much if we are making money on those decrease, right? I've made the video before, so I hope you understand that. Not much of a concern per se if they keep delivering, net income positive, right? And so, like I said, if they decrease it by 20% but still increase the net income by 30%, by this time next year, if you were to kind of like chain that along, I did a video on that too, so you could check it out, like my 2 other live stream that I did. you would project it to be $82 million for the next quarter four, right? Let's say they're, is able to do the same thing and decline and sell, right? And so, yes, you got a decline in sell of 20%, but if they're able to do the same thing here, then the net income would be $80 million. I'll take that. So, again, it's like the reason why I do that is because of this, right? From here to here, that's 30%, right? So if you project that a year ahead, the same thing. If 30% off of this one right here, let's just do that math right there. So time 30% more, that's $82 million fourth quarter with the 20% revenue down, right? That's what we're hoping, right? Now, if they make more, right? Let's say, okay, let's project that real quick. Even with on the decline, 1.794 times down by 20%. Okay, so that's 80% of this one. That would be 1.4 billion, right, for quarter four of next year. So if we come ahead of that, meaning 1.5, 1.6, or even staying flat, we're gonna make hundreds of millions of dollars, not even 80 million, right? With the operational costs that we have today. Now, assuming that there's nothing increase, right? The SG&A doesn't increase, staying flat or even decrease over time. That's also another factor as well. And so I don't understand how people could compare GME to AMC, with the exception that they're trying to mislead you into getting into AMC, right? Or misleading you to think that GME is the same as AMC, therefore you're not going to invest in it in the long term, thinking that it's just like AMC, right? Again, kill two birds with one stone here, and it's very effective, very effective. It's very hard for me to get people in and see this price action, and people, again, very antsy, very impressionable, so that any type of price movement in this stock is going to give people a heart attack in that sense. But hey, in my opinion, of course, I'm so lucky to have my training in Bitcoin trading. Speaking of Bitcoin is going down like crazy today. Right there, it's still cascading down. So I started my trading on Bitcoin. So the 20% down, 15% down a day doesn't scare me at all, right? In fact, I would buy more type thing. And so the same thing, in this environment here, knowing what I know about the company, it's doing much better, right? And also too, the lower it is, the more attractive this particular metric is going to be. Remember, at the onset of earnings, P/E ratio of this one it used to be 600% or 600 multiple, right? And this one used to be 62 or 67, right? Now it's 60 or lower than 60 right now, right? So again, the lower, the better for this particular metric. And there's a lot of people who trade on this, on this metric right here. And so you just have to wait for another quarter in order for that metric to even be lower than this, right? Because we're not going to stay at $6 million this quarter, or the next quarter, sorry. Because, let me tell you a little bit here. Right here, quarter, right? So now every single stat that I just showed you, the $6 million, is going forward using these 4 quarters, right? If you do the pluses and minuses, or add these together, you're going to get $6.7 million in the plus, right? And so if you're going forward, this one's going to fall off. And so the next one is going to include these 3 plus whatever we're able to achieve for quarter 1 of next year or next quarter reporting, right? And so if you project that, last quarter we were losing 2.8 million. Do you think we're going to lose any more this quarter with the amount of marketable security that we have currently, right? And if you look at it now, marketable security compared to last year, we're increasing it by $25 million. So that's good, right? Meaning that we have more in interest accruing account than last year, right? So whatever they were able to accrued interest payment, where is it? Sorry, like I'm long-winded today. I apologize, but it's very important to talk about because it's the investment of a lifetime, you guys. Come on. Sorry, I'm trying to be playful here. Okay, so last time when we have marketable security of 250, we were able to accrued okay, so 9 million from 9 million to this to 11 million, right? So if you were to do a kind of increase in you could do a ratio. So here's how you do it. So let's do a ratio here. Well, I have to do a quick math. Man, I wish I could do this. Oh, wait, where's my pen? This is terrible, you guys. I'm sorry. I'll do another video on it. It's just a bit. Oh man. Oh, okay, I got it. Okay. What I'm trying to figure out is how much in interest for quarter 1 moving forward, right? But it's just a quick math here. If you do a 9 million minus the 11 million here, the difference there is 1.2 million. 1.9 million, sorry. When you do that, you are able to extrapolate from this to this, right? So since it's increased by 1 million, again, so this, a simple math here, I might be wrong. So instead of 15 million, now we're going to go to 17 million, right? In interest, because of the marketable security is higher than it used to be, right? $25 million of it. Now, if you want to do a kind of guesstimate of how many percentage, let's say they're able to achieve about 4%, right? From that $277 million in marketable security, you're going to get $11 million. Depends on what they're buying into, and whether it's a short-term bond or a long-term bond, which is breaking down here. Now, I think they're able to achieve at least 5%. The lowest is 5% right here, right? But again, they could buy into the 6 months treasury bond here and get a little bit more. But let's just guesstimate that they're able to only achieve the 5%. So this is what you do. You just do the marketable security and then calculate the 5%. Right? Just 5% alone, they're going to be able to accrue $13 million for the next quarter. Right? Oh, wait, hold on. This is a whole year. Never mind. Divided by 4. Right? there you go. So $3 million. But again, like they could technically sell it into the market and get the appreciation of the proceed that comes from the increase in the marketable security as well. So the value might not stay at $277 million. I hope that makes sense. My point is that they're going to be able to accumulate that one to offset this loss right here. So if we are able to come ahead, right, meaning maybe plus $1 million instead of negative $2.9 million, this whole thing is going to show that we are making $50 million, right here. This is going to show $40 to $50 million in the plus side, right? Assuming that we're not losing money. If we lose money, that of course is going to be, lower. Depends on what's going on with that quarter. So in that case, this one is going to be more attractive too, the PE ratio, right? Including the current PE ratio and then the forward-looking PE ratio as well. So this is going to come down. Obviously, it depends on what we're able to make every single quarter, and then what is going to happen. But yeah, so you have to learn to separate between the price of the stock and the actual company itself. Now, the news out there would love you to associate with the price action, right? Because again, this is a pain point for us to see psychologically. They want people to sell out of this company desperately, right? Every single people, last call, fast pace, entertainment showing explosion in intersection of money, culture, and policy or whatever. I haven't even looked into this, but I already could tell that they're trying to pump into, Reddit and AMC. You see like the association there. None of these company making any money at all. None of these except GME right now, obviously. We all know that. And of course, this is Moran showed this one already. It's ridiculous, right? It's pretty comical that these people are trying to get you to look at the price action instead of the actual company itself. So, always be vigilant, learn about it, do your own research, and at least come up with your own conclusion, right? And even if you come out with a different conclusion than me, at least you find something, at least you saw it with your own eyes, that, hey, I'm not telling you something that is not documented here, right? Now, of course, the pain point also is the revenue down, right? That's something that we need to address moving forward, right? Okay, so I feel like that's all I have to cover. Seems like there's no opposition here, so I'm preaching to the choir at the moment. I think, yeah. Hopefully you guys are having a April Fool's Day. April Fool's Day? Anyone? But okay. I'm just killing some time here just in case there's any question, and also I want to make sure I cover everything. Yes, so current secure put, I already did that. Of course, something is happening here. Oh, gold went up in price, but silver is still the same one. Okay. I think that's all I have, you guys. So let's see what's happening tomorrow. And just a quick reminder, obviously, the 2 years, when the 2 years is lower, the yield right here is 4.69. is lower than this one, right? The 10 years, that's usually a sign of economic woes, right? But the Fed right now, of course, they're not going to do anything much, perhaps cutting rates. Traditionally they usually follow what the 2 years is doing. So if the Fed funds rate right now is at 5.5, right there, 5.5, they would usually follow, if they are going to cut, they usually follow this one right here. So they're gonna keep it at 4.5, right? Again, that's I heard it somewhere. But yeah, so let's see, what else do I need to cover? Okay, I guess that's it. I mean, Bitcoin is going nuts right now. Very red, so be in the lookout for that. Perhaps they're trying to pay for GME run tomorrow. Pretty notorious. Alright, Lana, I'm still looking for my price target at $10. Yeah, alright. We'll see about tomorrow. Alright, you guys, I will let you go. And thank you again for joining. Bye.